to our year-end video series. If you've been following along, you've already heard about sustainability. We've given a market update. We've talked about cash flow and farm economics, and also some government and policy changes that'll be upcoming. So now we're going to shift gears and talk a little bit about tax planning and year-end accounting. So to help us navigate these topics, we are joined by Kelly Hardy. She's a principal at CliftonLarsonAllen, and she specializes in ag business planning, compliance, and tax consulting. So thanks for spending some time with me today, Kelly.
Thanks for having me.
Yeah, you've got some practical advice on getting the books closed for the year, maximizing deductions, and preparing for tax season.
Yes, tax season is a farmer's favorite time of year.
Yes, it keeps us hopping at the grain elevator at the end of December and January as well. People often ask me, oh, is it slowing down now that harvest is over? And the answer is no, not at all. So, all right. Well, can you walk us through the key tax considerations for grain farmers at year end?
Yeah, I think most grain farmers are apt to pay as little as possible or find the way to pay as little as possible. But, really, we should be talking a little bit more about bracket management and how to pay tax cheap but smart. We need to look at depreciation. That's always a big item. A little less this year with equipment values being up. Prepays are always a big issue. Do I pay now? Do I pay later? Am I going to get a discount? And then, like you talked about in January, you're cutting checks for grain deferrals. And those are exciting items for people like me because I can actually play both sides of the year with those. And then always retirement contributions, cash retirement contributions, not solely relying on your farm to pay for your retirement, are an important trigger or lever to pull when you're planning for the end of the year.
Excellent. I hadn't considered that. That's a good point. And I like the bracket management, like you said. Yes. I had not looked at it that way before either.
Yeah.
So what strategies do you use to help farmers with income deferral or accelerating income based on their financial goals?
Yeah, and you had mentioned when we talked that sometimes you'll see growers forego good prices for the sake of income taxes. And that's something that you should never, ever do. You should never make a financial decision based solely on a tax reason. Yeah. You're essentially giving up $1 to save 25 cents. So there are lots of other things that, things we just mentioned. Do I take Section 179? Do I take bonus depreciation, prepay? Lots of other puzzle pieces to play around with to get to the place you want to be at the end of the year. Grain deferral is probably the biggest one where you push your grain payment to January. Well, the code says that that's actually an installment contract. And as long as I pick the whole contract up, I can pick it up in the prior year. So I can pick it up in 24, as long as it was a December sale, January pay, or I can wait and pick it up in January. So as a farmer, I can wait all the way until October to decide what I want my income to be by picking grain contracts and changing depreciation. So it's really a good spot to be in terms of managing your income.
Yeah. So we do like deferral payment agreements with farmers by contract is how we handle them at FS Grain in order for our customers to be able to do that and abide by the tax code.
Yes. And some elevators don't have the actual deferred payment contract. So it's important that you have that and good that you have it in place so that you meet all the requirements for the installment sale rules.
Yeah. Yeah. So how do you handle tax implications of government subsidies? We've recently learned of new subsidies that will come out here in the early year, or there are also grants that grain farmers may have received during the year. How do you handle those tax implications?
So fortunately, those checks from the USDA didn't get written in 2024 because that would have botched a lot of projections. So those are going to be 2025 income. We are seeing a lot of solar grants from the state of Illinois, some REAP grants. Those are taxable when received and fully taxable. You can't offset the value of your panels with the grant. So if I put the panels in service in year one and I depreciate them or take the credit, that's year one's expense. And then if I don't receive the REAP grant until the following year, that's year two's income. And I can't offset the two unless you have them timed in the right year. So it's important to watch when you're going to get that stuff. And a lot of it's beyond the grower's control, but we can manage income other ways.
Gotcha. Okay. Are there any recent or upcoming tax law changes that may significantly impact grain farmers' tax filings?
There's a big one coming. So at the end of 25, the Tax Cuts and Jobs Act that Trump passed in 2017 technically expires. And while we have an administration that's maybe a little more tax friendly, we don't know what's going to happen. And essentially, everybody, if it's allowed to expire, everybody will have a 3% tax increase. Some brackets will see a 9% increase in certain spots. And the bigger issue is that qualified business income deduction, or QBI, or it used to be known as DPAD, also expires. And that's where the farmer gets effectively a 20% reduction in his taxable income because he owns a business. So think about that for a minute. You're going to go from being taxed on 80% of your income to 100%, plus you're going to have a 3 to 9% tax increase. And the dollar changes are very, very large. So it's important that we, keep an eye on this, start managing income appropriately, and hoping that the new administration gets that law extended.
Yeah, that'll be top of mind here for us as well at the co-op. We use DPAD with our customers and our co-op managers or our co-op owners as well.
Yeah, I ran a projection just using, I think it was a $275,000 income swing year over year, and the loss of DPAD was about $20,000 in tax. So it's an important deduction to keep around.
Yeah, that'll be something that will be important for us to voice that to our lawmakers and whatnot, and rally for that from the grassroots up. So how do you assist grain farmers in managing cash flow at the year end while staying cash efficient, or while staying tax efficient? Sorry.
Yeah, this year was a great year for that because things were different than they were 2 years ago when commodity prices were high. So it was a lot of, I have this much cash and this is what I want to do with it. So as we go through projections, we'd select certain bills to pay. If I could get things financed through my local FS co-op through agrifinance at 0%, I'm going to use that instead of paying some other bill. If I can use seed discounts, I'm going to pay that first instead of paying my drying at the elevator that really doesn't have to be paid until January.
Right.
So it was kind of a mismatch of this is what I have to do, and this is the most cash and interest efficient way of doing that. Plus, let's get down to the tax number using certain expenses so we pay in the right amount.
Yeah, lots of moving parts, and we're always happy to run those projections of what things like the drying and the trucking and things like that cost on our side. When we run those projections, there's no obligation to pay those in the year ending, but we can, like I said, they're just projections for customers, and we do that often. Last question that I have for you is, what tax strategies do you suggest to help farmers handle farm debt or secure financing while minimizing their tax obligations?
So I guess what I'd say to that is, nobody likes to pay taxes. Farmers especially don't like to pay taxes. If I can pay taxes in 10 and 12%, that's smart. So I'm going to do that. The only way to pay down debt is to have cash, and the only way to have cash is to pay taxes.
Yeah.
So you want to do it as smart as you can. Manage your brackets. Make sure you're hitting the max on QBI. Don't waste all your depreciation all in 1 year. Prepay the right things, not the wrong things. And think about it in this way. You're going to pay the tax at some point.
Right.
So I can pay it once, or I can pay the bank every year.
That's
and oftentimes in this interest rate environment, it's cheaper to pay the tax, because what you don't want is at the end of your farming career to come out with, my last grain sales, my equipment sales, and it all goes to the bank because you've paid too much interest over time. So don't be afraid to pay the taxes. Just don't look at it as tax. Look at it as an overall financial picture and what's the smartest move to make.
Yeah. Yeah. The profitability piece of it.
Profitability is what matters, not income taxes.
No. Yeah, exactly. Well, thank you, Kelly. You brought up a lot of really great points here. Some things I hadn't considered. I grew up on a farm, but have not farmed myself. But talking with farmers every day, a lot of these things come into play and make a lot of sense the way you described them to me today. So thanks for that. And thank you to all of our viewers that have been with us for our 5 parts here. We will continue to do these video series throughout the year when we feel there are topics that are relevant to our producers. But for now, we will wrap this up and wish everybody a safe and profitable and prosperous 2025. Thank you.